If there is in fact a recession in 2020, or if we ever go into a bear market in general, never sell off your portfolio to cut your losses. What you should be doing instead is buying more and more shares of the stocks currently in your portfolio that are now at a lower price. What's up, everyone? I hope you're having a great day. It is the last day of 2019, and I hope all of you have met your goals for your investments by the end of the year. Let's go into 2020 stronger than ever before. And with that being said, let's take a look at the portfolio today. If we take a look, you can see that I'm just barely in the green today. We're only up by a mere 48 cents. And in the pre-market, we were down. That's because in the last couple of days, the Santa Claus rally that had been going on for the past week after Christmas had finally given up the ghost. And after that, the stocks kind of corrected themselves just in a minor way. So if we look at the week, you can see that our capital gains for the past week were canceled out. If we go back to here, December 27th, we were up $10, and now after the correction, we're only up $1.53. Now again, this is not a major reason to sell off your entire portfolio for. Let's take a look at what, in my opinion, is a better example. So just to give you guys an idea, we are at the all-time chart for my portfolio. And if we go over here, do not mind this left side. This is when I made the day trading mistake. But if we take a look here, you can see that, we're going up slowly but surely, having some corrections. And I believe this was when the first bad news of the trade deal happened, and that sent my portfolio down. And then it corrected itself. It eventually corrected itself, and it went back up much stronger than before, and it went up. And then what happened? More bad news, and all the noise traders sold off their portfolios, and that impacted the stock prices, and that made the stock prices go down. And then it was retracing, and then it went back down. And you can see that my portfolio went from 1200 to almost 1180. Now for me, since I have a smaller portfolio, a $20 to $30 decrease in the price, that would have a big impact in me since it's a smaller portfolio, and $30 is like maybe a 3% decrease in my portfolio. But to people that have larger portfolios, tens of thousands of dollars, that would have probably been a $300 loss within minutes. No exaggeration, within minutes. I remember it like yesterday. I was looking at my portfolio and it plummeted. But do you know what I did? I held. And what happened? The stock market, just in time for the holiday season, continued to go up higher, higher, and higher. And on top of that, I managed to become profitable over my previous day trading blunders back in August and September. So what is the takeaway from here? There's going to be some people out there where the recession hits and they panic sell everything. And what is going to happen to them? Well, when the Dow Jones, the S&P 500, and the Nasdaq finally correct themselves, they're going to miss out in a significant chunk of the correction and the explosive growth when the stocks recover. Because you can't really time when the recession is going to happen, and you can't really time when to get back into a stock that you had previously sold off. No one is going to know when the recession is going to happen. If you take a look back at articles that were published in 2015, 2016, up till this point, people have been saying that there was going to be a recession in all those times. And it's 2019, and there's not been a recession. And what would have happened if you had listened to these articles and decided, oh, I'm going to hold off from investing for the time being, and I'm just going to wait for the recession to happen? You would have missed out in the last 5 years of this bullish market that has been happening for the last decade. Take a look at your portfolio. I'm sure I can guarantee that at least 2 of the stocks that you own have made 52-week highs, at least in the last 5 months or so. The best time to start investing is right now. If I were to have been old enough to start investing and I was hearing all this news about the stock market probably having a recession in 2020 or 2021. So let's say a recession does happen in 2020 or 2021 and you're down way down, what I want you to do is something called dollar cost averaging. Now, dollar cost averaging in this sense is when the stock goes down and then you buy more shares of the stock in the hopes that when the market finally corrects itself and gets out of the recession and goes up, now the average cost of that position is no longer what it was originally, but it's the average amount of all of the times that you place the market buy. And by doing that, you're not only buying stocks at a discount, but you're also discounting the price that you had initially opened your position for those stocks. And that is essentially all you need to do. Dollar cost average and just average down and just continue to collect your dividends. Because if you're a dividend investor, you know that if you have dividends that have a good payout ratio, that are also preferably dividend aristocrats or have just been paying out dividends consistently for a long time, you will continue to earn passive income despite the stock market being up, down, sideways, whatever it's at. You have to understand that the stock market has these different phases. It's not always going to be bullish, but it's also not always going to be bearish. So why sell off the entire portfolio that you had worked so hard to create for all these months and maybe even years for something that is only going to last temporary? Just to put it into context, there was one time where the market did go down and it was because of the trade war news. And I was like, I can't take this anymore. This was like the third time it's happened. I'm tired of looking at myself have these capital gains and then the stock market just boom, because Trump and China can't make peace and just fix this trade war. And I sold everything. But you know what happened when I sold everything? This news came at 5 a.m. And with Robinhood, you can conduct trades in the pre-market and after hours, but it is not executed until the market opens at 9:30 a.m. Eastern time. So I had sold all of these, but I was going to sell them for whatever price they would have been minutes after the stock market opened. So what happened? Instead of cutting my losses, I basically sold them at the lowest price that they would have gone, or at least somewhere in that range. When I sold them, they probably went down like another $1 or more or less. And then after that, they started to show signs of them retracing and correcting themselves. And I was here waiting, well, should I buy it in right now, or is this just a short term? Is it going to be one bullish candle and then we'll start going down again? So I'm here telling you as is, trying to time when I'm going to get back, but I'm not sure when to get back. Do I get it now or do I wait a day? If I wait a day, what if they go back up sooner than I expected and they're retracing already and I miss out in that dollar amount? So what happens is that the price that I'd sold them off for, I probably can't afford to buy them maybe within the next couple of hours because they would have retraced. And if there's a stock that went from 300 to 280 and I sold it and it goes back to even 285, I can't afford it because I sold it at 280. I would have to put $5 more. Now I know this isn't really a valid example to use because it's not really a natural occurrence in the market in this case per se. This was just a bunch of investors selling their stocks and making the stock prices go down because they're afraid that this trade deal was going to not be ended as soon as it did. But at the end of the day, the same lesson can still be extrapolated to when a recession happens or when there's a bear market. Keep holding your stocks, keep collecting your dividends, and keep averaging down so that when the market corrects, you can reap the rewards of the rapid growth that happens following the recession or the bear market. Don't trade with your emotions. Keep doing what you have been doing this whole time and keep investing for your financial future to make it your financial present.